Hey, welcome back, subscribers, to my world of stocks, and welcome back to our stock market weekly update series, where I round up the biggest news headlines of the week and I deliver them to you in a quick, fun video. And this week, we once again have a flood of earnings pouring in, from big tech giants like Google and Tesla to even restaurant chains like Chipotle, and even some meme stocks making a comeback, including GoPro and Krispy Kreme. Oh yeah, it's going to be a fun one today. All of that and a lot more, including defense stocks, new trade deals, so much to talk about. Let's go ahead and jump into it, guys. All right, now as always, we start first with a quick recap on how the market performed this week. Just a heads up though, I am recording this on Thursday so that I can get the video out to you guys a little earlier on Friday mornings. Hopefully that'll be the new upload day and time for these weekly update episodes. But so far, the S&P 500 is up just about 1% for the week as it continues to break new record highs, while the tech-heavy NASDAQ climbed just a tad bit less than that, but also continues to break new record highs too. As for the macro news though, of course, all eyes continue to be on Q2 earnings season right now, so we'll focus more heavily on that. However, we did actually get some new tariff and trade deal updates this week, with the biggest of those really being a major trade agreement signed with Japan, or agreed upon with Japan, which lowered the previously threatened 25% tariffs on Japanese imports down to a baseline of 15%. That gave a lot of relief to Japanese automakers, especially. Japan, of course, known for exporting lots of cars, and that sent stocks like Toyota and Honda rising by double digits in Tokyo. The deal also came alongside a commitment from Japan to invest over $500 billion in America, while also opening their market to more American-made products, American exports like cars and agricultural goods, including rice. I don't think we've ever sold cars to Japan. I don't think that's a big thing, but hey, apparently now that could become something. Anyway, it also looks like the Trump administration reached new trade frameworks with the Philippines and Indonesia, where both are now facing 19% tariffs, down from earlier threats of 20 to 32%, with Indonesia even agreeing to drop nearly all of their barriers for American imports in return. So a big win there. Basically, Indonesia just giving America exactly what it wants. Meanwhile, though, things are a little shaky still with China, as Trump had previously warned countries like Vietnam that they would face high tariffs. Vietnam specifically, I think, is threatening like double the amount of tariffs that they would normally have for any goods moving through the country, through Vietnam, but that originated from China. So basically, if China is trying to get themselves around tariffs, higher tariffs, and they try to move them through another country like Vietnam, well, America would actually just slap bigger tariffs on Vietnam and punish them for it, which China, of course, obviously doesn't like to hear that. But the two nations, America and China, do seem to still be negotiating, with U.S. Treasury Secretary Scott Bessent telling Fox Business this week that their August 12 deadline will likely be extended, with another round of trade talks scheduled early next week. So we're slowly making progress on the trade front. Of course, America and China, being the two biggest economies in the world, really need a trade deal getting done there. I know there's a lot of pessimism, doom and gloom kind of out there and being reported, but ultimately I think those countries have to agree on some concessions and make a trade deal here in order to benefit both countries involved in the global economy at large. Still, though, a lot of nations are facing that August 1st deadline. That's still in play here. And so we'll probably be seeing some more trade deals get done next week too. I'll be sure to keep updating you guys as we head closer to that August 1st deadline, where tariffs could become actually much larger for any countries that don't get a deal signed with America. All right. It's time now for the fun stuff, guys. Let's dig into the individual stock news. But before we cover the big earnings reports, I did find this story pretty interesting here. It looks like some meme stocks were soaring this week, with the infamous, I always call them kind of a YouTube stock, because a lot of YouTubers would talk about this stock, but GoPro, the camera maker, action camera maker, it soared by almost 90% this week, and it was up even like 200% at one point during the week before falling back down towards the end of the week, with also the donut maker Krispy Kreme also rising over 30%, and it was up even more before the drop back down too. But this was apparently the result of that infamous Reddit group WallStreetBets. You guys remember them with the whole GameStop fiasco and sending stocks like that. I think at one point they tried to pump up Robinhood, several other stocks too. But basically, what this Reddit group would do is it would tell their entire user base to buy into a stock, send that stock price rising, and then that would cause a giant short squeeze, because many times these were like penny stocks, very low trading, very low price stocks that were getting heavily shorted by large hedge funds, large market movers, big institutional investors, traders, and so that would create a giant short squeeze where the bears would then have to cover their positions, and that would result in the stock skyrocketing by even more. And so that's exactly what happened here. Now, this again, none of this was really based on any actual news. There was no earnings reported here. I don't believe GoPro or Krispy Kreme reported earnings. I believe this was just a result of them basically being meme stocks here from that Reddit group and just kind of getting pumped up again. And it really just shows that, the meme fever never really dies. It just kind of hibernates until the next sugar rush, pun intended. Still, GoPro and Krispy Kreme are both down massively from their historic highs. But let me know down below, guys, if you own any of these stocks. I know back then they used to be popular, GoPro especially. Did you guys ever own those? I myself do not own these, and I don't usually mess around with the meme stocks. I'm always just a bit too scared to bet on those type of short-term trades like that. Anyway, one stock that did not have a great week, though, was the popular Mexican food restaurant Chipotle, who saw their stock fall over 15% this week after the company reported another disappointing quarter, with same-store sales falling 4% and overall traffic down 5% for the second quarter in a row, with even total revenue only climbing by about 3% despite the company opening more than 60 new restaurant locations during the quarter, 47 of which even included their popular drive-through format. And so really that's like the only place where they got any kind of growth was from those new restaurants. But again, same store sales, those were actually down, and that was a bad sign. Now, my guess is that a lot of this really has to do with Chipotle raising their menu prices, something that they've turned to now to kind of combat inflation they've been doing here. And my guess is that it's likely scaring off more budget-minded customers, given all the uncertainty in the economy right now. People, again, drowning in so much debt, prices, inflation, interest rates, everything's so expensive. They may not be wanting to or willing to pay those higher prices as Chipotle raises them. And so when we look at the company here, because of this, Chipotle also had to lower their full year guidance for the year. And again, my guess is because they're just not seeing as much traffic or as much demand as they're typically used to, or that they were expecting, right? Anyway, the result has been a continuous drop in the stock price recently, having now lost close to a third of its value from the top after a big run up in prior years. Let me know if you guys own this stock yourself. Or if you even eat at their restaurants. I know that it's a very popular food spot. I have friends that love Chipotle, but just from an investment perspective alone, I've never really been too excited about this one myself. I've always felt like there was a little too much hype here for a company that only really does one thing here, making, Mexican food, selling that. And yet the valuation was always so high just for that, where it trades, even now, it trades well over 100% more expensive than the sector on a PE basis. And that's even after this big drop here. So still an expensive stock, kind of surprising to me. Anyway, for some more positive news this week, my favorite stock in the entire market that has been my favorite for a while now, just kind of overall in general, I would say is Google, who reported this week, and they showed once again why they're just so dominant, easily beating analyst estimates on both the top and bottom line, with sales hitting, get this guys, sales, they were close to $100 billion in a single quarter. Can you imagine making that kind of money? And that was still up somehow double digits. It was up 14% growth year over year. And if you think that's crazy, net income soared by 20%, reaching more than $28 billion too, of just pure net income profit. It's absolutely mind-blowing, the type of numbers that Google continues to put up, year after year, quarter after quarter. And digging a little deeper here, search was up, YouTube and cloud revenues beat expectations too, with cloud soaring by over 30% year over year, which is also coming off of last week's big announcement that OpenAI is actually now going to be using Google Cloud for their ChatGPT services in various countries too. I believe they also use Microsoft, and there's some other one that I can't think of off the top of my head, but they'll also be using Google now, which is kind of a big deal. It's a big client to have for sure. In fact, Google is doing so well with their AI and cloud services. They're seeing so much demand for that they actually decided to increase their capital spending this year, the capital expenditures basically this year, from a whopping 75 billion, which was already, I think that was up from like 55 billion before, but they raised it to 75 billion. Well, they raised it again, now up to $85 billion that they're going to be spending to build out more infrastructure, of course, cloud, AI, and that's just going to be used to service the large backlog of customers that they have, that they said are trying to use all of their services, and they just don't have the infrastructure to meet all that demand, so they're spending on it. Now, of course, artificial intelligence was at first kind of thought to be something that could challenge Google, could kind of ruin them, hurt them, especially for their search platform, because many people might be turning to other AI options instead, like, ChatGPT and so on, instead of using Google search. But then Google actually implemented, well, not only did they launch Gemini, but they also implemented AI into search itself, integrating it into search, improving search because of it, and they've actually seen more usage because of that. And so the company is just firing on all cylinders right now. I think they're doing very well. In my opinion, I know there's varying opinions on this, but again, I still think that they're doing amazingly well. Despite those strong results, though, the stock didn't actually rise as much as you might expect it would, only climbing by less than 4% for the week, although they have still performed very well long-term and currently trade near a record high. Despite that, though, I actually think that the stock is still very attractive here, even after this huge run-up that we've seen in recent years. It is still at a very good valuation. It is in fact, their PEG ratio is actually cheaper than the sector still, if you can believe it. So I still love Google stock even here. As great as Google did this week, though, one tech giant that didn't favor nearly as well was Tesla, who actually saw their stock fall by another 5% this week. Now, for years now, the narrative around Tesla has really been, you guys know this, it's been focused on their exciting future in tech, all their technologies, namely their upcoming robo-taxis, autonomous driving, the Optimus robot, and just kind of everything that they're doing with artificial intelligence especially, right? Which, to be fair, is very impressive for what started out as simply a car maker. I mean, who would have thought like a car maker would be, now wanting to do robotics and would be doing so much with AI and having, cars that can drive themselves. So it is very impressive. And of course, they have battery storage and they do so many things with energy too. And there's other stuff that they can get into as well, and making chips too. So there's a lot that they do. However, this week's earnings report was a stark reminder of the company's present day challenges that do need to be addressed and that continue to weigh on the company, including slowing revenue growth, the looming end, I would say, of EV tax credits, and perhaps even some demand issues after all of the political drama centered around Elon Musk. I know you guys have seen that in the news, nonstop probably. Well, this quarter was unfortunately a reflection of some of those challenges, with auto deliveries actually declining by double digits, down 14% year over year, while automotive revenue fell by even more, down 16%. And so that likely shows increased pressure to lower vehicle prices, because if your actual car revenue is falling even more than your deliveries, that means that they're likely lowering prices too, right? So that's in other words, it's going to be putting more pressure on their gross profit margin, their automotive margins, which also declined as a result this quarter. And even their fast growing energy generation and storage business, everyone, expects that to just continue growing. Well, it managed to fall as well, reporting more than a 7% drop in the quarter too. So just all around, not a great quarter here. And as such, Elon Musk kind of tried to calm the waters a little bit during the earnings call. He focused more on the future, saying, quote, "I think we will have autonomous ride hailing in probably half the population of the US by the end of the year. That's at least our goal, subject to regulatory approvals. I think we will technically be able to do it." So he's wanting to, get everyone focused on the robotaxi business, and he's saying, "Hey, we can really ramp this up in the second half of the year." But of course, it's subject to regulatory approvals, which I always said was probably why he was getting kind of close with Trump, because Trump might help him with some of that. Now, who knows? Now, it's anyone's guess now how that's all going to play out with all the regulatory hurdles and everything else. Of course, autonomous driving, though, is where Tesla investors are hoping to see a major return to growth for the company, where they really expect them to rebound, with most analysts agreeing that that could easily, become a $1 trillion business long term, and just kind of in general, but Tesla could compete very heavily there. Still, at the moment, Tesla stock continues to struggle, and it's currently down about a quarter of its value this year alone, and more than a third from its highs. What do you guys think, though? I'd love to hear your thoughts. Is Tesla stock a buy right now? Do you own it? What are you doing with it? As you know, I did lock in some profits myself a little while back, but I'm still holding on to some shares for the longer term. And I'm excited to see what they can do with not just robo-taxis and the Tesla bot, but also, a cheaper consumer model that they also mentioned in this earnings report that they're going to be ramping up later this year too. So we'll see how that plays out. If they somehow mess that up though, the cheaper kind of mass market vehicle, yeah, it could be even worse for the stock than it already has been. All right, just to finish up here, I was going to talk about Verizon's earnings too, but I'm actually including them in a separate video this weekend. So you'll have to just watch that if you want to see how Verizon did. But I will, however, mention some defense stocks, because one company got crushed while a couple others did pretty well. Lockheed Martin, for example, reported a huge miss after taking over a $1.5 billion charge on some of its older classified programs that I guess they're now kind of trying to phase out or give the axe to. Well, it resulted in GAAP EPS of just $1.46 per share versus $6.52 expected. So a gigantic miss there. Revenues also missed though. And while they are maintaining full year guidance for sales and free cash flow, it's a positive sign. The company did, unfortunately have to reduce their profit and EPS targets because of those one-time charges that are now weighing on them. It's going to be, it's going to be included in the results for the full year. Now, personally, I don't think this is a huge deal. Again, these are likely one-time charges. I don't expect this to continue to be a huge drag on them going forward. And overall, this is still a company that historically performs very well during periods of global war and rising tensions, geopolitical tensions, which we obviously have a lot of that right now. Excuse me. Hence why their backlog is still massively large and worth more than $166 billion, because obviously there's still a lot of demand out there for the products and services of a defense company like this. But still, it was enough of a challenging quarter, really, with revenue growth almost flat in the quarter, that Wall Street sent the stock falling by over 10% on the news. Now, on the other hand, though, Northrop actually delivered a fantastic quarter, beating analyst estimates on both sales and profit, while even raising their guidance for the full year. In fact, analysts were expecting almost the same amount of EPS as they did for Lockheed, but where Lockheed only did around $1 of EPS, Northrop did like 7 times that amount or something like that. So they did way, way more of EPS, obviously, because they didn't have to take those hits. And so because Lockheed, though, is really busy here, just taking massive write-downs, while Northrop is signaling even better profits than previously expected, well, investors seemingly kind of left one stock and poured into the other is kind of the way I see it here, sending Northrop stock rising by over 8% for the week. But these weren't the only defense companies to report, though, as also RTX, formerly known as Raytheon, delivered a strong quarter too, growing sales by 9% year over year, with profits beating estimates as well. And the company noted that demand is so high right now, in fact, particularly for their advanced missile and air defense systems, that it's created an even bigger backlog of orders than Lockheed's at over $236 billion. Despite the great results, though, the company did have to lower their guidance because of tariffs, which they predict will cost them around $500 million this year. So they're taking some hits as well on that bottom line. And as such, the stock didn't climb nearly as much as it otherwise probably would have, with only about a 2% bump for the week. But again, it was still positive. But again, the real story here, I think, is just how so many investors seem to drop Lockheed in favor of some of their rivals here this week. Now, time will tell if that's a smart move, though, because I could easily envision Lockheed rebounding from here. It's currently down about a third of its value from the top, given all the rising, again, geopolitical tensions and war in the world, everything going on. I would imagine that they're not going to struggle too much going forward. But I don't personally own any of these stocks myself. I think the heavy ties to war and killing and all that stuff just kind of shakes me a little bit too much. I'm not, I don't know, I'm a little too shaky. I'm not strong enough to own these kind of stocks myself. But what do you guys think? Do you own or even like any of these stocks over the others comparatively? I'd love to hear why or why not. But anyway, that'll do it for this week's update, my friends. I hope that you enjoyed it. I hope that you're all doing well out there. Next week should be a ton of fun too. You won't want to miss it because we'll have reports coming from other big giants like I believe Amazon, Microsoft, Apple, and Meta are all reporting in 1 week. So it's going to be a crazy week next week. But either way, I'll be sure to update you guys on all of it. Hope you're all doing well out there, my friends, and I will catch you in the next video. Take care, everybody. Bye-bye.